Hello traders everywhere, Adam Hewison here, co-founder of MarketClub and founder of IKnow.com. I'm here with your midday update for Thursday the 9th of January. Not sure you've heard about the Herbalife Smackdown with between Bill Ackman, or William Ackman, and also between Daniel Loeb, two big hedge fund managers smacking each other on where this market's going to head. We'll be looking at it with our trade triangles to give you a really clear, unbiased opinion of what we think of Herbalife. So let's go right to our portfolio. And we've got a lot going on today. We're also going to be covering the Amazon Walmart trade we talked about before a few days ago. And also we'll start with the S&P 500. Okay, the S&P 500 is up today. It's a plus 70, but it's not in a bull market yet. And here's why. Looking at the chart, we can see it's going to come up in just a moment. And here it comes. And looking at the chart, we can see, yes, it's trying to get up there, but it's really not doing it. And the reason I say that is going to put our candlestick charts in, and I'll scope this in just a little bit closer so you can get an idea. So here are the previous highs. The previous all-time high, not all-time high, but the recent high we've seen is 1,474.31. Now we got today, and we also got to 1,470 rather, and today we got to 1,469 and failed, at least so far. So the market looks like it's getting a little bit tired. And what I mean by that is, if you look at the momentum that we're seeing in this market, it really is looking a little bit, oops, let's just take that off, we don't need that. We're looking at a little bit of a slowdown here in the momentum. You see that? That's the divergence. Just popped into new highs, but we haven't seen this market move into new highs. So it looks like it's getting a little bit tired. We're basically unchanged for the week. Not much change going on there. And I would say probably we'll have to see how this market closes for the week. But generally speaking, one thing I like to do, and we'll be doing this more tomorrow, is look at the weekly charts and see where the market is closing for the week, if there's any changes or any really big important levels that have been hit. Now looking at the trade triangles, and let's just clear that up. Looking at the trade triangles, you can see quite clearly that the monthly is down, meaning the bigger trend is still negative, and the intermediate term trend is up. And mixed picture meaning you should be neutral on this market right now. Even though it looks tempting to be a buyer, it should be neutral. So moving along to the Dow, pretty much the same picture there. Not quite as bullish, in fact, as the S&P, or not quite as close to the highs. You can see the highs were made in September and October, and we really haven't gotten there yet. We're sort of still meandering around here. I think, generally speaking, I think this market looks a little bit more negative than the S&P 500. So moving along to the Nasdaq, pretty much the same picture there, like ditto on the Dow. You sort of moved up higher, boom, we came back down. If we close low, I'd be very careful about watching this as an outside day in this market, because the other thing, as I mentioned on the S&P 500, is the fact you have a divergence here with new highs in the prices, but not in the momentum. Very important. We are plus 60, meaning a trading range, and we're at the high end of that trading range. I would say watch this market very carefully. If it closes lower today, lower than let me just clear this up for a second. And if we see a move, I would say, and close below the 3,096 level, which is about another 8 points lower on the Nasdaq, I would say that's going to look very negative for this market. So moving along to crude oil. Crude oil had a big pop today with some of Mario Draghi's comments. It's up on the day. However, it is not broken. If you remember, with the last several days, we've been talking about this big base that's being built in this market right here, this huge energy field we saw it. But we also gave you the key level to look for, and that was 94.87. That was the key level that we would pull the trigger and everything would turn green, plus 100, strong trend. Okay, we got today, the high was 94.70, and we had a pullback. Now it may make that higher later on today, make a new high later on today, but somehow I'm a little bit concerned about this, and I'll tell you the reason why. We haven't seen the momentum work for this market. The momentum is still a little bit negative, okay? A little divergence going on there. And the other thing I want to share with you is this, and that is if we take everything off the screen, go to close only chart, take everything off, all the monthlies, and go back to, let's say, a little bit more data. And this is what we showed you yesterday and the day before, and on our show, and that is this line right here. This is a very powerful line, and look where we are. We're just sort of kind of touching it right around the 94 level. I'm not sure it's going to close over there. Maybe it will, but we'll have to just see. But generally speaking, this is a classic trend line we talked about in our Traders Whiteboard series last night on the TV show. And if you haven't seen the show, you can more than welcome to see that. But generally speaking, I think we may see a bit of a pullback, but nonetheless, the interim trend, and that's the weekly, is basically positive. And we trade this market, the crude oil market, with the weeklies and the dailies, and they're both positive. So you should be looking, you should be long this market based on just this strategy. What we're waiting for is a big number, is the monthly to kick in, and that will be a whole nother world that we'll see in this market. So let's go to our next market, and that's going to be the EURUSD. Now, Mario Draghi came out today, big news, the dollar bumped up. If you remember what we said yesterday, we were bullish on the euro against the dollar simply because the technicals were telling us that was the way to be. And you can see today's action, pow, really a big move up today. In fact, you're up almost 1.5%, which is a big move in currencies. So if you just look at this, we put some of our other tools in. We have our Donchian trade channel and the parabolics. So the parabolic kicked in today. We're at the lower end of the Donchian trade channel, which you mentioned yesterday, and we're popping back up. It's not clear yet. This market's cleared this sort of hurdle around the 33 level, 133 level, but certainly it remains positive technically. Everything is a go technically. So on gold, gold was another beneficiary of Mario Draghi's comments today. Is that as bullish? No, not really. The monthly and the weekly are still negative. Only the daily is saying you should be out of this market at 1,662. You'd mean short, and you would have covered this position with today's action. So again, nothing to get excited about too much on the gold. We said yesterday we thought this is a 61.8% retracement, that the market should find support around the 30 level, 1630, 1635 level. So I think it's done that, but it needs to do a little more work before we can get too excited about this market again. So moving along, we're going to look at silver. Silver, much the same picture there in tandem with the gold market. It's really just come back to the midpoint of its Donchian trade channel. Nothing to get excited about there. Weekly and monthly still negative, and only the daily is positive, meaning it should be out of the market at the time being. So it's maybe making the turn, but it's too early to confirm that this is a turn in silver or gold. Moving on to copper. Copper is an industrial metal. Obviously, demand should be high. Is it performing really well today? Not really, but it's still plus 100. So the trend is still clearly up. You can see that we're just trying to inch back up and test the 375 level. This is in the March contract. So let's go into our next market. This is Herbal Life, or Herbal Life, however you pronounce the H. But generally speaking, this has been a real smackdown. I'm going to take this out a little bit further so you can get an idea of where this market has come from and where it's gone up. So you had a really, from the lows that was seen in 2009, that was basically, let's just take that weeklies off so you get an idea. So it's from the lows that was seen in 2009, you're really seeing a very sort of aggressive move up. Wow, from where we less than $10, even almost close to $5, all the way up to $70. Now, is that company doing that well? Now, Bill Ackman doesn't seem to think so. He thinks it's all a pyramid scheme. And he could be right, he could be wrong, I don't know. But the reality is we don't rely on that to tell us how to trade. Now, the other gentleman involved in this is Daniel Loeb. He thinks it's all BS, and Ackman is also full of BS. But the reality is the market has come down from 70 down to 25. And it's currently trading at 39. Now, if we put our trade triangles in, this is the important thing. I'm going to put the monthly trade triangles in. Boom. So here's the first one that comes in. And the first one comes in right here at 10. Let's call that $11. It's $10.94. Let's call that $11. You get a signal at 48. That's a $38 profit. You get back in 60.94. You're out at 57, so you lose $3 on that if you're just using the monthlies, but we use the monthlies and the weeklies. So the last big signal was $57.33. The market's currently trading at 39. The trend is down. I'd have to go with Bill Ackman on this. The trend is clearly down. Is it going to go lower? Perhaps. The trade triangles will tell us. I don't have to listen to Bill Ackman or William Loeb about what they're doing with their positions. I'm more concerned about what you are doing with your positions and what we're doing with our own positions here. So let's put the weeklies in there. And you can see you've had a couple of weeklies. The weeklies got out really well, 68.65, pretty close to the very top. And then you had a big move. The last weekly signal was 49.38. That's $10 ago. And so we're sitting with a nice profit in this position right now. I'd rather trade on what the market's telling me as opposed to what some hedge fund manager wants me to believe. So that's the key to the trade triangle. So let's go to our next market. Next market we're going to look at is Facebook. Has Facebook come alive? Well, let's put our weekly triangles in, our monthly triangles in, and boom, there's the buy right there, 24.25. We're currently trading at 31. And you can see they've had a nice move up. We put our weeklies in there. You can see we've had a nice move in the monthly from 24.25 up to 26.12. Nice profit. Back in again at 28.75. Currently trading at 31.02 and change. So a very, very nice profit. It looks like Facebook has made the base we talk about. We like to see these bases being made. And when you see a market come in, so here's the energy field, what we call an energy field. And there's, as I say, there's no reason to jump in front of these markets when they're just doing this. And wait, we've shown you the videos on this in our Traders Whiteboard. You wait for the breakout, wait for the monthly to kick in, and then when it kicks in, get long. That's as simple as that. That's what you want to be. Be patient and don't listen to the hype and the media and all the talking heads. This is the way to trade to make money. So let's clear the screen again. And let's see what we've got here. Let's go to our next market. Now, Ford Motor Company, you can't get more diverse than Ford and Facebook. So Ford Motor Company makes motor cars, and you can see right now, if we scope this in pretty closely, you can see, let's do 6 months. You can see our monthly is kicked in right here at $10.66. We're currently trading at $13.84, so that's a nice 30% move there. And we haven't had a weekly signal since. So it's still very positive for Ford. They've upped their dividend to 2.9%, which is nice for a lot of people. And the trend is your friend, and the trend is clearly up in Ford. Now, I want to go back to my portfolio because a couple of things there. We talked about Walmart and Amazon. Now, we talked about basically being long Amazon and short Walmart. Now this just changed. So you can see right now they're both down. But the reality is instead of losing a 1% on Amazon today, if you're just net long the stock, you'd only lose 0.5% because you were actually short Walmart. Now the reality is this just changed a few minutes ago, and this could change before the day is out. But you got a minus 85 for Walmart and a plus 90 for Amazon. Where would you want to be? You want to be long Amazon, short this market. You can see this is going to change around the day. When I looked at this earlier, it was in favor. You would have made 0.5%. Now you're down 0.5%. But you're never going to get killed in something like this. It's really a very conservative way to trade. You're always going to be hedged, long and short in the market. So we've covered a lot of ground. Tomorrow's Friday. We're very excited about that because we'll be looking at all these markets on the net weekly change and seeing which markets we want to be going home long with and which markets we want to be out of for the weekend. So I'm Adam Hewison for Market Club. Have a great trading day. I'll